Aurobindo Pharma, of course, a large company, large pharmaceutical company here in India, declared its numbers, and of course, as we have been highlighting, that pharma companies in this quarter one has been having a phenomenal run. Whether you talk about cost saving, whether you talk about higher sales in India, whether you talk about the upgrade cycle, as the street would generally look at, one of the best upgrade cycles for the pharma company that you could have seen in the last 3 or 4 years. Now let's talk about Aurobindo Pharma. Aurobindo Pharma is a different company when you compare to some of the other large majors that we have here in India. So when we talk about Aurobindo Pharma, India business is not that high. In fact, it's as good as negligible. When we talk about the US business, that's about 50-55% of their sales. Europe is about 20-25 after the recent acquisition, or not the recent acquisition, but the acquisitions which have been incorporated into the business, and that's why those markets play a very important role. US did well, $412 million. The expectation was about 358. There was an expectation for decline on a QoQ basis, but they got it flat. So that's definitely a great number that has surprised the street. On the other hand, Europe was weak, but in Q4 in Europe you saw the COVID impact, and a lot of pre-stocking happened over there. The API business for the company did not particularly do that well when you compare it to peers. Otherwise, it has grown 7%, but Aurobindo has a lot of antibiotics and direct supply in API. So that's why maybe it has not done well. So comments on that would be interesting to watch. The key thing to watch, of course, is the margins. So gross margin expanded, came in flat on a quarter-on-quarter basis. YoY expanded by greater than 150 odd points. So that is something which gave some relief to the market. On the other hand, when you talk about the margins as a whole, 21.8%. So again, that's a very good number. It's not that it's a bad number, but when you compare it to the context of what sort of upgrade cycle others have seen, it may not be that high or that big a surprise for the street. Then when we go and look at the net debt position, in Q4, they reduced their debt drastically. They said that going ahead, they will reduce their debt. The street was estimating $100 million in terms of reduction, but they have gone ahead and reduced it by $168 million. So that's a big number, when you just talk about a reduction in the debt. Will they look at a debt-free balance sheet going ahead in the next couple of quarters? That is something which the street would eye out for. Time and again, it has always been said that why debt of Aurobindo is so high, why do they don't reduce their debt? But now when the free cash flows are getting generated, acquisition has been called off, they are using this opportunity to pay back their debt. So let's wait and watch what happens. But the debt reduction definitely came in as a surprise. Guidance on debt reduction, if any, they provide is something which will be very keenly watched by the market. One or two more key things to watch out in Aurobindo definitely are what is the trends in the US generic pricing, what is the mix of injectable and oral solids. One believe that oral solids would have done well into this quarter, so that is something which one will watch out for. Oral solids are not that high margin as injectable, but injectables have direct supply to hospital, and that's probably the key reason why injectables may have not done that well because of the lockdown in and around the world. So guidance on all of these would be important, both on oral solids and injectables.